Okay, so we are here today with Carla Rosetta from MBC Mortgage, and we were going to talk about, there's a lot of information about, getting a pre-approval and stuff like that, but we really want to talk about how important a loan officer can be in getting an offer accepted. Not all loan officers or even mortgage companies are the same. So Carla, why don't you just give me a little bio about yourself?
Sure. All right. So I'll try to keep it short and sweet. But so I've been in banking for a very, very long time, 25 years or more. And I started all the way from the bottom of being a teller to finishing my days at the credit union as a CEO. And then I came over to the mortgage world. Now I own my own mortgage brokerage. So I am a loan officer, a mortgage lender, and I think that covers it. Yeah.
So we can assume you know a little bit about what you're talking about.
Yeah, I mean, that's really my point, is that I think the beauty of my strength is, one, that I love people, but also really truly that I have seen everything from processing, back office, escrow, mortgages, like the inner operations of it.
That's important.
It's all important because I think especially for new buyers, they don't understand all those little pieces. So I know them through to exhaustion, right? So I can explain them inside and out.
Okay. So I want to touch on something that you said, and I think it's important for buyers to understand this. You own a mortgage company. So you're a lender, correct?
I am a lender. So
that means that you work with multiple banks. You kind of line up buyers with specific programs. Am I correct?
Yes.
Okay.
So I think
go ahead. I'm sorry.
Yep, that's fine. Yeah. So I think that's the strength of a broker is I have multiple wholesale lenders. And so depending upon my individual client's needs, I can place them with the best lender for their picture.
Well, I think, and the reason why I brought this up, if you're putting 30% down and you're a vanilla borrower, your bank probably offers a great rate and everything.
Sure.
When we're talking about first-time home buyers putting less money down with different credit scores, there is definitely an advantage to going to a lender versus a bank. The bank usually lends their own money, though some banks do act as a lender, but usually they're very limited in the programs that they have to offer. Would you agree with that?
Yeah. I mean, I think as a broker, you definitely have more
tools available.
Yes, exactly. Yes.
Okay. So I think that's important to note when you're going out to get your pre-approval and find a lender, really consider, should I go to my bank or should I talk to a mortgage lender, because they are a wholesaler. And, quite frankly, interest rates are going to be roughly the same if you're comparing apples to apples. And it's really, what can they provide me? And we're going to touch upon this later, but especially if you already have a house and you're trying to compete in a seller's market, there might be some great programs available to you that will make you competitive, because that's what we're talking about today, is how can your mortgage officer help you get your offer accepted? We're in a difficult market still as far as buyers go. So we'll touch upon that in a little bit, but let's start off with, the pre-approval. I think, lots of times buyers run out and start looking at homes before they really start talking about the money. But when you're talking about getting an offer accepted and having your mortgage officer become part of that team to help you construct an offer, we need to know exactly what the finances are. Can you touch upon that a little bit, Carla?
Yes, absolutely. So 100%. So you're right. So often I will have a client come to me because they already found a home, but it's definitely putting the cart before the horse, because you need to know, one, do you even qualify for that property? You want to know what the monthly payment would be, because even sometimes one of the first questions I ask my clients is, well, sure, I might be able to approve you for X amount of dollars, but you might not want to make that payment. So you need to really, truly know all the ins and outs in the financial picture of what it means to be in a certain price range for a mortgage. And also, we want to get ahead of any income issues. Like, are you variable income? Are you self-employed? We have to look at all those things, iron them out, make sure they're We totally know your exact income. Also credit. I mean, there might be things you might be able to qualify, but maybe we need to get your credit score up because the pricing is going to be totally different if we work on a few credit tweaks. But if you're at the point of wanting to make an offer, you know, in this market, it's very competitive. It's very quick. You might not have time to get the best financing available to you because you didn't take the time to package it before you started looking.
Well, so my background, and you and I have had this discussion before, is I was a mortgage broker. And several years ago, I had a client come to me who wanted to buy a home. And we did a few things with the mortgage broker. And we raised the credit score 118 points in 45 days. It's probably the most incredible situation I've been in as far as correcting someone's. But I think people need to know that, you know, approximately every 20 points that your credit score comes up, there's a benefit to you, whether it's loan program, the interest rate provided, so on. And so if you start with that pre-approval process first, you have time to make some tweaks. I mean, the difference between a 670 credit score and a 682 could be quite drastic in what you're offered for, you know, you could save, you know, $100+ a month just by that small adjustment in credit score. So very, very important. If you want to be competitive in this market, to get your pre-approval early. I mean, you can, if you've met with an agent, they will help you work with a mortgage broker and help line up the right mortgage broker with you. And also, there's also a synergy between an agent and mortgage officers that they work with on a regular basis. I recommend people that I've met and I've worked with, and I know they can get the job done. And, you know, also I'll line up, so, you know, some lenders are better at certain things than others, and I'll line them up with the right lender. But that relationship is extremely important. The worst thing that can happen for me is you get a pre-approval from Rocket Mortgage.
Right. And, I mean, I've had some of my agents come to me at the point of making an offer because they make the offer. Their client came to them with Rocket, for example, and the listing agent says, absolutely not. You need to get me a different pre-approval. They don't want it. I'm not saying that's every transaction, of course, but that has actually happened with me where it's, you know, first of all, there's, you know, you're doing everything on phone and online, you know, sometimes a personal meeting because, you know, you're a couple of towns away from you is important. And I know as a buyer's agent, if something's going sideways on a loan because of something that the mortgage, I'm going to go find them. The communication is key, I think. And, you know, to that point where you're saying there's a synergy between your buy-side realtor and your mortgage lender is like, for instance, I have some of my realtors will send in the offer and they'll CC me and they introduce me. You know, this is a lender I work with on many, many deals. We have 100% close rate. And then, of course, I also respond and let them know that this buyer has been fully verified, income, assets, credit, all approved through automated underwriting, fully verified.
This raises an important point here. You know, so when we talk about a pre-approval, a loan officer that is really doing their job properly is going to verify the things we talk about, you know, credit, income, assets. They're not just going to go on your word. And you know, so sometimes the difference between like a Rocket Mortgage or a big mortgage company versus, you know, a lender is a lender is more consultative and more hands-on, where a big company like Rocket or, you know, and I don't want to pick on Rocket, but there's a million companies you can go to that don't actually have a facility in state. What they're doing is they're issuing pre-approvals without doing the same amount of work that someone like Carla would do. And what they're doing is they're issuing the pre-approval and they're just throwing it up against the wall and hope it sticks when you find an offer. Where when I work with someone like Carla, when she tells me they're approved for this, I know the loan is going to close. No questions asked, and I have a lot of confidence.
And, you know, even if sometimes it's a tricky buyer, because we have those buyers, right, where it's not the perfect layup, right? Maybe the down payment's a little bit smaller, maybe the debt to income is tight, but we're working in synergy. So right, exactly the profile of your buyer, and know what things we need to look out for and how to protect them through the process so that not the buyer, none of the agents, no one's blindsided, right? We're all working together.
So, and I think, so one thing that needs to be said is a seller's biggest concern is that the loan is going to close in a prompt and timely manner. And so, we shouldn't take the pre-approval lightly. You did touch on something, this tends to be a lofty subject, but because I've been in the mortgage business, when I'm on the listing side and I make a phone call to the lender to kind of vet the pre-approval letter, the best thing that I can hear is you've been run through desktop underwriting and you got an approved eligible. Yeah, I'd love to hear that, because as long as the input is good, then the loan's going to close, where a lot of mortgage lenders are not necessarily running the desktop underwriter. Mortgage officers come in all different shapes and sizes.
Sure. Yes.
You really want to find that consultative person who will take you from A to Z and, protect your interests throughout the whole process. And they're not just writing pre-approval letters, hoping, a certain percentage will stick. I know as a mortgage officer, I never lost any loans. You
really shouldn't, unless something extremely unusual happens.
Like a job loss at the last minute.
Exactly. That's the only way it should not work out, honestly, is some really unusual reason. But I think that's, to your point, as a consumer, when you're getting pre-approved, you should know if there's something unusual. If the loan officer doesn't go over, okay, these are some placeholders we used for insurance, some placeholders we use for taxes. This is what your all-in monthly payment will be. What are your payment goals? What is your all-in max cash to close goal? That means when we talk about all-in max cash to close, that's your down payment plus covering closing costs, or any strategies we need to deploy around closing costs. Sometimes I have these buyers come to me and just all these little boxes haven't been addressed and covered and explained. So if you're working with someone that really hasn't enlightened you, you're probably not working with the right lender, because if you don't do it every day, there should be something you're learning through your loan officer.
Exactly. So that kind of raises the next point, or I want to reiterate the point that the pre-approval is your starting point, and it is very, very important, especially in this environment, to getting an offer accepted. The pre-approval letters, I know I have a little bit of frustration with some of them, because a lot of banks and lenders limit what a loan officer can put in a pre-approval letter, but a conversation can vet that very, very quickly. So that also brings up the point that your loan officer, once you submit an offer and say you're in a multiple offer situation, I know I go through and I call every loan officer. Sure. And I ask a lot of questions and I listen. And for example, maybe about 2 years ago, I had a home in Danvers, and there was an offer that was leading the pack. It was the highest offer. Well, actually, no, it wasn't the highest offer. It was about $5,000 below the highest offer, but they presented it as a cash offer. And so I'm going through, talking to the mortgage broker. Come to find out, it really wasn't a cash offer, or she needed to get a home equity line of credit, and her house sold. They did not, I asked the agent this, it didn't come through, but it came through with the loan officer. And so we actually went with a different offer that was a little bit higher, was very solid financing, and booted the cash offer because she hadn't even applied for the home equity line of credit that she needed. And I'm like, so in talking to my seller, we talked about it, and because it's always the seller's decision to make, not mine, sure. But all I do is present information. So that phone call, and an experienced listing agent is going to make the phone call to the mortgage brokers that are involved. And so the mortgage broker themselves can be instrumental in selling the buyer's financing to the listing agent and who then presents it to the seller. And that also leads me to the fact that some loan officers I never reach. And, if they're doing a very boilerplate pre-approval, I'm just like, I don't know this person. I've never worked with them. This is a boilerplate pre-approval, but, I can't vet it. And so also your loan officer needs to be available to talk to the listing agents. Very, very important. And what do you say about that, Carla?
So I guess you should also, if I was being represented myself, I would only want to work with a loan officer that was available 7 days a week. So that is definitely key. I mean, a lot of these things happen on the weekends. You might need an updated pre-approval letter. For me, myself, I'll say that every single offer that goes in is a customized pre-approval letter. So I vet that exact property's taxes, recalculate all the numbers. So I know that that property works with my buyer's debt to income ratio, their finances, their down payment, and I am available and on demand, which is something that every buyer should have in their back pocket, is a loan officer that is available on demand 7 days a week. Because as you said, you have to be, I always answer that call.
Yeah, I mean, you can be instrumental in getting an offer accepted by talking to the listing agent. And, the big thing that a lot, maybe inexperienced agents and even sellers is, they see 3% financing and they, oh, no, I need something that has, but you want to know what? It doesn't matter if you're putting 3% down or 20% down. It really is what is going on behind the scenes with your credit, assets, and income. Some people might have, they can put 20% down, but they want to retain their cash, maybe to do some repairs. And this is where a loan officer can really come in and say, this loan's a home run. I mean, so 3%, you can have a 20% down buyer who, you're on the cusp. There's some questions about their income, and they're still trying to vet that versus a solid 3% down deal. I'd rather have the solid 3% down deal that, is a home run all day long. And, so that conversation is very important. And you need the loan officer like Carla, who will pick up their phone when that phone call comes in. You and I both know, you're not accepting offers usually on 9 o'clock on a Wednesday morning. It's usually, Friday evening, Saturday afternoon, it's not a long conversation. It's just a conversation where the loan officer says, this is what I've done. I've run, this is important. I've run credit. I've reviewed asset documents, meaning savings, checking, retirement account. And I've gone through the W-2s and tax returns and, have verified the income, where some loan officers don't do that. I mean, they might do it might be just a credit check and say, well, I'm going on what they told me. And that's where mistakes can happen. The biggest mistakes that I see that buyers make, and I just had one not that long ago, and I turned them over to have it vetted, is they were including a second job, but the second job was only 2 months old. And you and I know that's not going to fly with an underwriter. Their income was almost double with the second job. And so they were running their numbers based upon that. And I'm like, no, it doesn't work that way.
So experience matters. I agree with that because there are some intricacies around income. But yes, 100%. To touch on your 3% down, I will tell you, I have had agents call me and ask me, okay, tell me a little bit more about this 3% down. And it is an opportunity for your loan officer to say, hey, listen, they have 3% down. It's a choice. They have backup assets. This is not a picture because they can't do more. And depending on the scenario, of course, but it might just be because they want cash in the bank, which is very smart, especially as becoming a first-time buyer in this scenario, being a first-time buyer. But it is the opportunity for the loan officer to really explain the strength of the buyer, which I always do. Because if you come with a good loan officer, even with 3% down, even if there's no extra cash, if you are fully vetted, your offer is strong.
Yeah. Again, in that conversation between the listing agent and the loan officer can make all the difference. I mean, I've had offers that are here and then a conversation will tip the scales one way or the other. Yes. So, when we talk about how your loan officer is a vital part of your team to get your offer accepted, That's really important. And then, now to lead into the next thing is, when you talk about loan programs and fitting you into a situation, you and I know right now in this environment, it's very hard to get an offer accepted with a house to sell contingency in it.
Yeah.
But there are programs out there, and everybody has a slight twist on it, that allows you to carry both houses, or there's specialty programs. And that's a conversation you can have with your loan officer ahead of time. So basically, if you're in a multiple offer situation and you have 5 offers that are not contingent on a house to sell, and then there's your offer, which is contingent on a house to sell, you're going to lose. You're going to lose. But I'm sure, can you touch on maybe some loan programs you have to address that, Carla?
So I personally, in full disclosure, I don't have any bridge loans or anything would waive the home sale contingency if you own an existing home for debt to income ratio purposes. But to your point, if that is something you need to figure out ahead of time. So you get your pre-approval, you need to know if your debt to income, sometimes maybe you can carry both. Maybe you don't need a contingency, but if you do, even if you came to me and I don't have the product for you, maybe your realtor, or you realize that you can go find another program that will cover you in that scenario. And if not, then you work with your loan officer and your realtor to build a strategy around keeping the home sale contingency, right? Like, these are all things that really need to be addressed up front so that you have eyes wide open and your strengths and your limitations. Yeah,
and exactly. It's one of the things when I list a home, one of the things I look at, and sometimes sellers are like, what are you talking? They're like, I talk about, okay, how is a buyer going to view this house? What are the negatives? Can we address those negatives and either minimize them or, just make them not very obvious at all? And, same thing with a loan is, not to say we can't get offers accepted with a house to sell contingency, but it will be very, very difficult if you're in a multiple offer situation.
Yeah, 100%. It's definitely more challenging if there's better offers or similar offers and you have a contingency, they're going to go with the other offer for sure.
And so there's another scenario too, where sometimes people, that have a house right now and they want to buy another house, and move into another house. Sometimes a lot of their money is tied up into the house they have, and say their down payment or their good faith estimate deposits are weak. They can only put down like $5,000 on a $700,000 home. This might be a discussion that your realtor, your loan officer, and the buyer have, saying, well, maybe we need a home equity line of credit where you can put 5% down so we can get a deposit of, $35,000 rather than $5,000. Because again, in this environment, you're competing with other buyers heavily, versus 2012, you could probably make that fly because you were the only offer on the table and you weren't flooded. There weren't buyers coming in, 3 buyers a day coming in viewing the house. And so you have to look at the real estate climate. And, that's something that both your realtor and your, I'll be honest, sometimes I can say something and they're just like, yeah, you're just saying that. But then the loan officer comes in and says exactly the same thing. So you've got 2 people verifying, this is the market you're in. And, the market you are in definitely plays a huge role in your strategy as far as negotiating and how you look at houses and so on and so forth.
And it's a funny thing that I really do want to touch on that about having a local lender. I do think that in tandem, they work with your realtor. And I cannot tell you how many times a borrower has asked me a question that is really something the realtor is going to guide them on. And they've gotten some feedback from their realtor, but they just, they want to double check, right? Because I'm helping them with their finances. And it's helpful to have known what my buyers are dealing with in this market. Just this morning before our call today, I had a buyer ask me, what do you think about waiving appraisal contingency? And I know this area. I know Massachusetts. I know that in full disclosure, yes, if there are other offers and you're above ask, you have to waive the appraisal contingency You don't have to, but if there are other buyers who are not waiving, who are waiving it and you're not, then they're just like the home sale contingency, all the contingencies, right? Whether it's the inspection, whatever they are. If somebody else is waiving them in this area, they're going to be viewed as a stronger buyer. So it definitely is a backup to your realtor, so you can just kind of corroborate and know that you're not just...
Yeah, that synergy is so important. You know, for example, right now, you know, I hate telling a buyer that, you know, they're competing with people willing to remove their home inspection contingency. I think it's a very dangerous, slippery slope to go down. But let's face it, how many offers are you seeing where it's waived these days? A lot. And, you know, a seller presented with waiving the contingency versus keeping the contingency, they're going to waive the contingency with things. They're going to go with that offer, given things being relatively equal. I would say that's worth $5,000 or $10,000 sometimes, and so they might choose a slightly lower offer to go with that offer.
Yeah, I mean, I think as a buyer in this market, you have to work closely with your realtor and you have to work closely with your loan officer, because you really need to build a strong offer. And you have to be aware about what sellers and listing agents are looking at as just not as competitive. So, you know, they want to know that you're not going to walk because you got an inspection. You're not going to start asking for a lower purchase price after you've already negotiated a purchase price because you did an inspection. So those are the things that, you know, really kind of worry the listing agents and the sellers. And they want to know your financing is rock solid and that they're going to get to the closing table smoothly without any hiccups, without any stress. No seller wants to be sitting around nail biting, right? That this house is actually not going to have to go back on the market because, you know, the financing isn't as solid as they expected it to be.
You know, when that happens, a property does become a little stigmatized, but it's like, what happened?
Yes.
What's wrong with the house? And so it is a big deal for a house to come back on the market, even though you might be, you know, you probably can find a buyer quickly. You might not get the same price. Because some buyers are going to be, why did that come back on? You know, and it becomes stigmatized.
And you also might be under a time crunch now because you're first as the seller. Now you might need the house to sell faster, so you're gonna take a lower offer potentially. You know, it just changes the scope of the transaction. So, but to be the number one things I do want to say, I think we've touched on all of them.
Yeah, I think that, I was going to say, my Zoom's going to run out here in a few minutes.
I want to just
let's
kind
wrap
of
it up.
List them. So you want to be ready with your pre-approval. Before you even start walking into open houses, get your pre-approval, know whether or not you can afford it.
And let me reiterate, you need a solid pre-approval. You need someone like Carla who is vetting every piece and identifying any potential issues that need to be taken care of. You know, there's a pre-approval, then there's a pre-approval. And so you want to make sure you have the right pre-approval.
Fully verified. Like if you're withdrawing, for instance, just like a little thing, if you're going to be using K assets, your loan officer should be asking, are you sure how much you're actually going to be able to withdraw? What's the timeline for getting those funds? So there's a lot of intricacies about all of the things, right? Income, credit, assets. You want to use ideally a local lender who can talk to you about just what's going on in the market. Like I said, someone asked me earlier about, should I be waiving contingencies? And, you know, they need to know your personal financial picture to walk through. And also someone that can talk to the listing agent and your buy-side agent. Another thing that sometimes makes your offer stronger that we touched on was maybe a bigger earnest money deposit. So your upfront deposit shows you have more skin in the game. You want to be flexible with your closing date. So as a lender, you want to know if your lender can close quickly. Are they stuck on a 45-day close? Because that might not be as competitive. Like if you're talking to me, I'm going to let you know based on your personal scope, can I do it in 25 days? Or is a little intricate and maybe we need longer. Additional things are to make your offer more competitive. Are you coming in with FHA, or are you coming an FHA mortgage, that is, or a conventional mortgage, and the pros and cons of both. We also touched on the home sale contingency, and then also waiving any contingencies, which really your realtor will explain to you, and then your loan officer will educate you financially on them.
Okay, great. So we only have a few minutes here, so I want to thank you. This was a great conversation, and Carla's information will be below if you're looking for a loan officer. You're out of Andover? Oh.
Linfield.
So you're out of Linfield. She can cover loans anywhere, but like I said, if I like to have a loan officer that's nice and close. So her information will be down below. I've known Carla for a little while now. She's top notch, and have no problem saying you will not be disappointed.
Awesome.